Hi everyone, my name is Javier Bello and I'm gonna do a financial analysis about Kellogg's company versus General Mills. Both of them are multinational food companies. A little introduction about Kellogg's company and General Mills are the several segments where they are subdivided. In Kellogg's company, they are subdivided in geographic location, where is North America, Europe, Latin, South America, and rest of the world. Then General Mills are divided in segments, which are like North America retail, international, pet, and North America food service. To answer the questions of why to invest in a company, or we choose, first we have to know first what is invest and why to invest. What is invest is putting your money to work, and what is invest is getting your money, getting more money without work. As you can see, Kellogg's company has better percentage in return on assets and in return on equity. This means that Kellogg's company is more effective. In the other hand too, Kellogg's company is more profitable. Continue with the profitability analysis. Here is the net income margin and the gross profit margin. In both of them, General Mills has better percentage than Kellogg's company. In net income margin, we can see a higher distance in terms of the higher ratio of income that General Mills has over Kellogg's company, but in gross profit margin, I cannot see a huge difference between both companies. So there is no a term, so I have to look for in terms of invest. Solvency analysis is company's ability to meet its debt obligation over a long term. These high levels in debt ratio and debt to equity ratio means more debts and more risk of losing money. As you can see, in debt ratio, Kellogg's and General Mills has almost the same ratio. But in debt to equity, General Mills has lower ratio, so that means has lower risk of lose money over the time. Productivity analysis is how effective a company is in terms of managing credit issue. This is calculated by accounts receivable turnover, days sales outstanding, and cash conversion cycle. As you can see, General Mills has better ratio in accounts receivable turnover, which means that General Mills is managing better the credit. Also, you can see that General Mills have less days sales outstanding, which means too that it has less time. They need less time to sell the product. Now I'm gonna talk about vertical analysis, which means too accounts receivable as a percentage of assets. You can see that Kellogg's company has higher percentage on accounts receivable as a percentage of assets than General Mills, but that's not a good point. The good point is that General Mills has their assets better distributed than Kellogg's company. Liquidity analysis is use several ratios to determine the ability of an organization to pay its bills in a time manner. This is important for lenders and creditors who wants to gain some idea of finance situation before giving a credit to a customer. As you can see, the results are almost the same with Kellogg's and General Mills, so we cannot conclude which of the ones are better. Horizontal analysis is also called trend company performance, which means that how a company grows over the time. As you can see, General Mills has improved more than Kellogg's company in this past year. But I heard that in previous years, Kellogg's company was higher in those numbers. So that can tell me that Kellogg's company has a better name than General Mills, so it's hard to improve. In the balance sheet analysis, we compare the Kellogg's company and General Mills company. The important numbers that I look for to see which is better in those terms are between net operating profit assets tax after tax and flip. This means that Kellogg's has better financial performance than General Mills. Statements of cash flows analysis shows the ability to operate in the short and long term. As you can see, Kellogg's company has better numbers in terms of investing cash flows, financing cash flows, and net cash flows. But General Mills has better numbers on operating cash flows and free cash flows. To finish this presentation, I'm gonna show my conclusions on where to invest or which company choose to invest. If you are an investor who are looking for a long term, I will choose Kellogg's because it has a better return on assets and return on equity ratio. Also, they has a better capital allocation and it's good a financial performance. On the other hand, if you are an investor who are looking for a short term, I will choose General Mills. Why? Because General Mills has a good net income margin and gross profit margin average. Also, they have a lower risk of losing money.